Hey everyone, Apple is scheduled to report fiscal year 2024 third quarter earnings results after the markets close on Thursday, August 1st. So in this video, I'll preview what Apple stock investors can look for coming out of Apple in this quarterly earnings release, and I'll also answer if investors should buy Apple stock before the company announces earnings. So there's a lot to cover. Let's jump right into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so one thing I'm looking out for Apple is to stem the losses on the top line. In the latest quarter ending March 30th, 2024, the company reported $90.753 billion in revenue, and that was down from $94.836 billion in revenue in the same quarter the prior year. Now, I'm looking for Apple to slow these decreases in sales. Now, one of the categories I'm seeing growth from Apple is in the services segment, and I'm hoping for that to continue since services are significantly more profitable for Apple. You'll notice here they report their revenue on two different segments, products and sales. And let's take a look at services in particular. You can look at services revenue, which increased by roughly $3 billion year over year, while the product segment decreased by roughly $7 billion year over year. And you'll notice that products cost of sales came in at $42.4 billion out of $66.8 billion in sales, while services costs were only $6 billion on $23.8 billion in sales. What's more, you'll notice that services costs actually decreased year over year ever so slightly, even though revenue increased by $3 billion year over year. That's strong indication of economies in scale, which are characteristic of a services business. When you're selling services like the kind of services that Apple sells, which are digital, they offer better economies in scale because costs do not rise along with increasing sales. For instance, if there's an extra subscriber to Apple TV Plus, that's just incremental revenue on the top line for Apple. They don't have to undertake any more cost with that additional subscriber. That content has already been made, it's already up on the platform, and it's only minor incremental cost when a new subscriber adds and starts watching that content. So I'm hoping and looking for Apple to continue expanding the services segment, while I'm hoping and looking for Apple's product segment decreases to stop. But I don't think that's going to be the case. I think Apple's product sales are likely to be down again year over year, given there was no compelling reason for folks to buy an iPhone in this recently completed quarter. People who are waiting to upgrade iPhones are not likely to buy right now, or are less likely to buy right now, given they're waiting for the latest product release from Apple that's going to be infused with artificial intelligence. Now, another thing we're expecting from Apple in the upcoming earnings release is an update on their share buyback. Remember, they announced a massive share buyback program, and that's having the effect of reducing the number of shares outstanding, which I've highlighted here. They now have 15.46 million shares outstanding, and that was down from 15.847 million shares outstanding in the same quarter the prior year. And this has the impact of increasing the earnings per share because it takes this net income number that you'll see here, 23.6 billion, and that's shared by 15.464 million shares outstanding to create this earnings per share. And so if you have fewer shares outstanding, then this number is divided by a smaller number, which gives you a higher earnings per share. And so Apple's been massively buying back its shares, and it's been reducing its shares outstanding, and existing profits are split among fewer shares, increasing its earnings per share. Apple expects to continue that since they're generating so much cash, which I'll share with you a little later in the video. And they're finding limited areas where they can reinvest in the business. And so they're going out and repurchasing shares. Now, another strategy is also they've been increasing their dividend, but their dividend increases haven't been as aggressive as their share buyback program. Another key category I'm looking at is Apple's sales in Greater China, which fell to 16.37 billion, down from 17.8 billion in the prior year's similar quarter. And I've been getting updates out of Apple's results in China that seem to show it's losing market share in the smartphone segment in China. Its rivals are catching up, and given Apple's limited innovation over the last year or two, it's giving competitors an opening to gain market share. Now, the biggest driver of Apple's business is iPhone sales. Now, even though they have the services segment growing and they have other products, Apple is typically what gets customers into its ecosystem. I should say the iPhone is what gets customers into the ecosystem. And then they're more likely to buy other products like an Apple Music subscription or the AirPods or the Apple Watch. And so the iPhone is really critical to Apple's success, and it's struggling recently. 45.96 billion in sales, down from 51.3 billion in sales in the same quarter last year. I suspect more pain from this segment in the upcoming quarter, and hopefully for Apple stock investors, that year-over-year decrease will not be as large as it was in the first quarter. As I mentioned earlier, Apple generates significant cash flow from operations, which came in at 62.5 billion in the first 6 months of its fiscal year 2024, which is flat from the first 6 months of the prior year. Now, that's impressive for Apple to keep their cash flow flat, even though total net sales are falling. Still, Apple stock investors can benefit from this 62.5 billion, and if you annualize this, that's over $125 billion in cash flow Apple will generate in 2024 on what will be another down year for the company. So imagine if Apple innovates and comes up with artificial intelligence that facilitates sales of iPhones and other products, and if it grows from here, from this massive base, what a boom it could be for Apple stock investors. Nevertheless, 62 billion and 125 for the year, if it does the same over the next 6 months, means Apple's business will be infused with over $100 billion of cash that it can then use for dividends and share buybacks and reinvestment into the business. Now, whether or not investors should buy Apple stock before earnings, right now it's trading at a forward price to earnings of 29.85, which is on the higher end of where this stock has traded for going all the way back to early 2022. So if you're thinking about investing in Apple stock, which I think is a solid investment, it's trading at a fair value and it's an excellent business, but I wouldn't do it before earnings. I wouldn't invest in Apple stock right now before earnings. I don't expect there to be a major catalyst in its earnings release that will send the stock price much higher than where it's already at, given that it's already near its peak valuation over the last couple of years. And so given the added risks that you get from the downside following an earnings release, I would say it's more prudent to wait until after earnings to buy Apple stock. Of course, I'll have an update and an earnings review from Apple when they release their quarterly earnings. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.